Okay, let's talk about the New York City real estate market as it stands right now. And as it stands, in my view, we have hit an inflection point in the market. The market is softening underneath our feet. We came off of 2021. It was the strongest year for New York City real estate in history. The beginning of 2022 started out that way as well. And by the end of 2022, I think you're going to see a very different market than we're in the first quarter. This quarter, second quarter, we're transitioning. The third quarter, I think, is going to be maybe the peak of pricing and the way we look at stats. And then by the fourth quarter, we may be on our way down. So this is a little faster than I expected it to go, but it does seem to be changing. So it remains to be seen exactly the timeline of these things. Why is the market changing? The market is changing because the Fed has been raising rates, greatly affecting people's ability to get mortgages and or I should say more the ability of how much house you can get with your mortgage. Rates going from a few months ago around 3% to over 4% now, maybe up to 5% or higher in the near future. And then in addition to that, you have the financial markets. The stock market is down significantly. So if you were, heavily tech invested or growth stock invested, and you're seeing your returns on your market are like down 20 or 30%, right? So this affects the cash to be able to make down payments. It affects cash for people who are planning on buying cash and have it in the market until they're ready to buy. And what this means is particularly, I think that the rates are affecting the segments of the market in the real estate in New York City where buyers are more dependent upon their mortgages. So that's typically going to be in the lower end, below $1 million in Brooklyn, below $2 million in Manhattan. And so let me take you to some stats. I'm just going to read this stuff so you can see it. So here we go. So this is the Manhattan weekly snapshot of May 7th to May 13th. 334 contracts were reported signed last week, which is down 12% versus the previous week and 21% year over year. Okay, signed contracts down 21%. So last year, 2021, was a really good year. So it makes sense that we would be down from that time, this time last year. It doesn't necessarily mean that we would be down 21%. That's a big number. Not all categories performed weaker, however, than 2021, as new development sales rose and studio sales grew by 2%. Now, if I had to guess, new development sales, I feel like there's just sort of a lag in terms of new development sales because foreign buyers and other folks, which new development sales typically tend to be higher priced. So I think that some people are sort of getting to it, getting a late start on sort of their buying of new development. Studio sales growing by 2%. I don't know if this is statistically significant or not, but the only thing that might make sense to me is that certain first-time buyers who want to get into the market, they're trying to get in before rates go up any further. And so you're getting some of the sort of smaller apartments going up. Okay. So, I can break down, it takes a while to break down all the different stats. I can talk about this stuff for a long time, but let me bring you over to Brooklyn. So Brooklyn, weekly snapshot, 107 contracts were signed, reported signed last week, up 1% versus the previous week, but down 33% versus last year. Contracts signed have now declined year over year for 4 consecutive weeks. These are important numbers, 33% down in signed contracts and 4 weeks consecutive, they've been down. And it points out that yes, in 2021, this was one of the strongest weeks ever in the history of real estate again. So we would expect things to be down. We wouldn't expect them to be down 33%. That's an important thing. Interestingly, Bed-Stuy, Crown Heights, Prospect Lefferts Gardens, and Bushwick saw the highest number of signed contracts last week, up 54% week over week and 67% annually, thanks to many one-bedroom sales under $1 million. So, this is interesting. So the farther out parts of Brooklyn, farther out from Manhattan, so in lower price point areas, Bushwick, Bed-Stuy, Prospect, Lefferts Gardens, these places are actually doing well. They're still seeing a boom to some degree. When you are a little closer in, and depending on the price point, it's a different story. And I'll give you two examples. One is I have a buyer. We're in put a bid in on a townhouse in Park Slope that was listed at 3.995. And we went in over ask, over 4 million. There were 14 offers on this Park Slope townhouse. It was a nice townhouse that had beautiful original details, but needed work, needed bathrooms, and kind of the kitchen was sort of, not that well done. And we saw 14 offers, 7 of which were approximately 4.5 million or above, and a couple of which were, I think, over 5 million. So I think that the final, I don't have the exact number, but the final contract price of the winning bid was going to be over 5 million. That's 25% over ask for this Park Slope townhouse. Okay. And I'm hearing similar stories from other agents about townhouses in Bed-Stuy and Bushwick and other places. Now, in another arena, in the one-bedroom co-op arena, I have a couple of one-bedroom co-ops where we're looking at them, they're getting no showing requests. They're getting very few people coming into open houses, very little, it's like crickets. And these are one bedrooms under $600,000. So this is part of what is happening, is that we're seeing softening in certain segments, in certain areas, and then in other areas, it's still hot, right? It is definitely changing. Every agent that I talk to feels that it is changing as well. And the stats are starting to bear that out. So if you're a seller and you're still thinking about selling, I would get on that right away. And if you are a buyer and you are eager to buy, I would say that keep looking for places that you love and at a price that makes sense to you. But do you have to hurry right now? Maybe not. Maybe you wait. And if you're an investor, and investors are the most patient of these groups, I tend to find investors, sharpen your pencils, because sometime by 2023, I think we're going to see a soft market, a market with more deals for you, the patient buyer and investor. All right. So that's it. I'm happy to talk about this stuff a little more in depth or about specific neighborhoods, et cetera. Just reach out and let me know.